disclosure last week that it would launch a fresh QE programme saw investors continue to push markets higher. I'm joined down the line today by Arek Okrasa, FX trader and coach at London Trader, to find out how this news has affected markets and allow him to share his predictions for three currency pairs. Mr. Okrasa, thank you for joining me. We're focusing today mostly on the dollar. Today the dollar updated its lowest level in 4 months compared to the euro after the launch of a third round of quantitative easing by the Federal Reserve. The euro demonstrated growth after the announcement of the decision of the German Constitutional Court, which approved the country's participation in the European Financial Stability Facility. What does an increase of the exchange rate mean for those using the dollar?
From my point of view, mainly I support your fundamental assessment, and at least for the next 3 months, I would be looking to the upside for the euro dollar, for example, as a currency pair, mainly based on the twist operation coming from the FOMC decisions, and also which might happen with the LTRO in Eurozone.
What do you predict for the euro dollar in the short, mid and long term?
If I start from the midterm, I would see the euro dollar. I'm quite positive on the euro dollar. I see the currency pair going to the level of maybe 1.340 handle for the next 2 or 3 months, but from the next 12 months, I wouldn't be so positive because the debt pile, which basically increased in the Eurozone, from my point of view, will send the currency pair back to the 1.230 level, so around 900 pips from the level where we are right now. Nevertheless, that's the 12-month point of view, and in the short term, I would be looking at the euro dollar to move up around 150 pips to the level of 1.325, and when the level is reached, then I would expect the euro dollar to drop to the level where we are right now on the session. Is it 1.3 level?
Today, the British pound is trading quite quietly, with movements at the upper end of yesterday's range for the time being. There are no major economic events for the UK today, but what events will be affecting the pound, and what do you predict for the pound dollar in the short, mid and long term?
From my point of view, at least at the moment, the British pounds look quite positive as well. There are two reasons for that. In somehow, investors see the British pounds as a safe haven, mainly because the SNB, Swiss National Bank, protects the exchange rate on euro-Swiss franc. So I see investors, they swap from Swiss franc into the British pound, and they see the currency as a safe haven. And also the twist operation, which came from Fed, supports weakening the weakening in the US dollar. So in the midterm, for the next 3 months, I would see the British pound versus the US dollar at the level of 1.670 handle, which is basically around 500 pips up movement when we are right now. Nevertheless, for the next 12 months, it really depends. I would rather say that the British pound will reverse similar as the euro dollar, and within the next 12 months we can see the currency pair moving back to the level of 1.550. In the short term, I still support the up view, and in the next 2 or 3 weeks I see the currency pair moving up to the 1.645 handle, and if it happens, then I would expect the market to come off, drop to the level of 1.630, 1.625 level.
Lastly, let's move on to looking at the Australian dollar. This currency remains well buoyed by the US Federal Reserve's new stimulus plans, and it's also gaining support from stabilising iron ore prices. What do you see from the future of the Aussie dollar?
I'm glad you mentioned that, because the Australian dollar most of the time it's the commodity currencies, and with having in mind that China might easing their economy, as we can also see the quantitative easing in Japan. So as a commodity currencies, I'm looking strongly to the upside on Australian dollar. I support the upside view. And I would say in the next 3 months, we might see the currency pair moving up to the level of 1.086 handle. And if this resistance is broken, then we might even go up higher to 1.095 handle. And if that resistance is also broken, then we might see return to the previous record high, which was at 1.1070 handle. That's for the next 3 months, very, very optimistic point of view. But we have to have in mind the tension in Libya, tension in the Middle East. So if the tension increases, also with the debt in the Eurozone and the economic problem in the US, then if that happens, if the debt in the Eurozone increases and economy in the US slows down, this might cause the slowdown in global economy. And as we know, the Australian dollar is strongly linked to the global economy. And if the global economy slows down, we might even see for the next 12 months, the currency pair moved back to the 1.000 handle. But for now, probably for the next 2 weeks, I will be looking at the euro, the currency pair, to move back to 1.045 handle and probably go long with the currency pair from that level.
Thank you, Mr. Okrasa, for your insights and predictions. That's all from me, but if you want to know more specific data for this week, check out the Week Ahead interview with my colleague Monica Gibson. Take care.